Good afternoon, traders and investors. It's Will back here with another one, coming to you with a Sunday night video, guys. And it's that time of the week where we do the top 5 options plays for the upcoming week. On the channel, we do run the put wheel strategy, meaning we are writing puts at designated strike prices in hopes of gaining all that juicy premium by the weekend if the stock price stays above our strike price. It's a very easy strategy to run, guys, whether you're a beginner, intermediate, or even advanced investor. It's a very high win rate probability strategy as well. Usually most of these trades 95% of the time will end up in a win, meaning you just walk away at the end of the week with premium in your pocket. And if not, if you get assigned the stock, it's kind of even better because we will be able to write covered calls against the position and generate even more premium. So this is a options seller strategy as a whole, and one of the best trading strategies in my opinion, and it's the one that I use the most frequently in my own trading account that I showcase on the channel. So with all that being said, guys, we have 2 major events coming up this week, one of which is extremely important, and that is we have a Federal Reserve meeting from Jerome Powell in terms of an interest rate decision on Wednesday. But not only that, guys, they are also coming out with the summary of economic projections, also known as the dot plot. In other words, guys, this is going to be their expectations for the number and frequency of the rate cuts that are potentially coming later on in this year. And with the hot inflation reports that we've been getting now over the past 2 months, I do expect that report to come in fairly hawkish, meaning most likely Federal Reserve members will revise their estimates of rate cuts to the downside. So the market is currently expected 4 or 5 rate cuts for this year. With this report that's about to be released on Wednesday, we could expect them to taper back the amount of rate cuts from 4 or 5 down to maybe 2 or 3, and that would definitely have a negative impact on the market. So it's a very big catalyst this week, guys, and the markets should be very volatile leading into this. So we have to be careful with our strike price and stock selection this week specifically. Now, in the second event, guys, this is going to be a more lighthearted event. We have the very important NVIDIA GTC conference. This is their in-person AI conference where AI is pretty much going to be the hot topic of this 3-day event. It starts pretty much tomorrow and runs all the way through Wednesday. If you don't know what this event is, it's basically NVIDIA showcasing not only their abilities, but they have a ton of sponsors and partners which will be presenting at the event. Different companies, whether they're in whether they have different stocks as a whole, or even cryptocurrency companies are presenting too. So it'll be a very, very interesting space over the course of the week. And I do expect 2 sectors to be very volatile as a result of this. Semiconductors, number 1. So any semiconductor play stemming from NVIDIA as a whole, right? Think of NVIDIA, AMD, Intel, companies like that. And also, the companies that are going to be affected are the ones that do have some very high skin in the game in terms of AI. Think of your major tech companies, Apple, Google, Microsoft, and the likes. So should be a very good news catalyst for most of these companies. So it'll be very curious to see how this positive event can potentially be balanced with the negative event of the Federal Reserve. All of that to say it's going to be a fairly volatile week. So in today's video, guys, we're going to review the strategy rules of the put wheel strategy. We're going to be going over that very quickly. Then we're going to be reviewing last week's top 5 plays, see how those did. And then we're going to get into this week's top 5 plays. And I do have a few bonus plays always on deck for you guys to constantly be monitoring if you like doing that. So without further ado, guys, let's get right into today's video. So let's go over a few of the put wheel rules. And keep in mind, before we go over the rules, guys, we are still in daily bull control here on the S&P 500. However, the QQQs are now in a daily downtrend and really starting to cut below that trend line. So I am expecting a little bit more bearish continuation leading into the Federal Reserve meeting and potentially thereafter as well. So we're going to be very careful with our strike price selection if we choose to go with tech stocks, because I potentially am expecting a little bit of a sell-off. I'm still very optimistic on the long-term trend of the market. However, in the next few weeks, guys, I'm cautiously optimistic at best. So just keep that in mind when we go through these rules and when you're picking your strike prices for this week. So Some of the rules here, guys. Number one, has to be a solid company. Please never write any put options or any options in general on companies that you do not want to own or you do not like as a whole. It just makes managing the position, if ever you get assigned those companies, a bit difficult, as you will be wondering why you hold them and you won't have high conviction. We need to have high conviction in every single play we take, guys. It's the rule number one for that reason. Now, number two, we want to be writing on red or flat days. So this ties into the expected move of a stock. Let's take Apple, for example. If Apple on any given week can go up or down 5%, and let's say on a Monday or on a Tuesday morning, the stock goes down 2-3%. Well, you know that in relation to Apple's expected move, it's already moved down, right? If it moves 0.5% in a week and it's already down 2-3% Monday and Tuesday combined, well, you know that you're getting really close to the downside expectation. So it allows us to write those puts at the expected move or slightly below. That's what we're targeting. So you'll never really see me write puts on any green days specifically, guys. I really want to give myself as much of a win probability to the downside as possible. And that really only comes when you're writing on stocks that are already red to start off the week. It just adds more probabilities in your favor of those contracts ending worthless. Number three, we want to be writing on stocks that are in a monthly uptrend or a long-term range. This is just because we will have longer-term support from the bulls. We want our long-term bulls to be in control because they are going to be the ones buying those dips at the support levels that we are buying. So try and focus on stocks that are in monthly uptrends or at least long-term ranges. So all the probabilities are on your side that if it does come down into our level, most likely we get a bounce from there. Now, number four, we want to be focusing on companies that don't have earnings this week, guys. I always focus on this. I think it's extremely important. Earnings are very, very, very volatile, right? You can have a good impression on where a stock is going to go. But for example, if you take in consideration what Adobe did last week, we went over Adobe earnings on the channel, and they were actually fairly good. They literally missed their guidance on revenue, guys, by 1% for next quarter, and they were severely punished. That was the only financial metrics that they really did miss, was their guidance for the upcoming quarter, and they went down about 14%. Otherwise, this report was perfectly fine. I was not expecting a 13% drop on Adobe, but that is the nature of earnings, guys, and which is why I tell everybody to stay away from them. They are so hard to predict. Now, a lot of people get lured into them because the premium is relatively juicy. However, it's a double-edged sword, right? More reward equals more risk, and we're just in the business here, guys, of trying to manage the risk as best as possible. So all in all, just recommend not playing them, as they can go either way, and you may end up with a very negative surprise that you're not ready for in the portfolio. Now, number five, we want to be writing these puts at areas of support or areas that are breakout retests. Once again, this just adds to our probabilities of not being assigned. If we're constantly writing at big support levels, it means that our long-term bulls are there to buy those dips. We're trying to put all the odds in our favor. And if you want to take a look at what I mean between the breakout retest versus the support trade, we'll take a look at Autodesk right here, right? So you can see Autodesk had a nice little range going for it right here. Well, the lower end of this range, guys, is going to be known as your support level. The breakout retest is something like this, where we're in a nice weekly uptrend, breaks out of the top end of your support range, touches it as support now at this point, right? So we have the breakout, retest, and run, extremely high probability trade, as high probability, in my opinion, as targeting a direct support level. So this and this are the two types of trades that you'll always see me showcasing on the channel, as they are very high win rate probability trades. Now, point number six, we want to be targeting between 0.5% and 1% in weekly premium. So this is how much money are we going to make from these puts. So let's say a stock is currently trading at $105. And we want to write the $100 puts. Well, if you want to know if that's a good trade or not, just look if there's 0.5% to 1% on the bid. For a $100 stock, it's very easy. You should be looking for 50 cents, aka $50, or a dollar. On the bid. $1 would be $100 in your pocket, pretty much, because an options contract is obviously 100 shares, right? So you want to see 50 cents or $1 on the bid for that $100 stock. If that doesn't make sense yet, I will show numerical examples in the tutorial video today and in our options plays. This is really an art form, guys. The why only 0.5% to 1%, guys. In my opinion, it is the best range that you can generate not only a decent amount of returns on an annualized basis, but also taking the least amount of risk for that. If you go above this percentage mark, you run far greater of a risk of being assigned. And if you write below this, well, unfortunately, you're just not going to be making enough money. So this is really the sweet spot. That's why we're targeting that range, guys. Now, the before last point, we want to be writing at or lower than the expected move. It ties into writing on a red or flat day. So as I said, guys, if a stock has an expected move of 5% to the downside, we want to be targeting as low as possible towards that expected move. If you don't know what the expected move on a stock is in a given week, you can go to this free website right here, optionsai.com. They have a free expected move calculator here. And as you can see, I have Palantir pulled up for the week. You can see the expected move to the upside and downside is about 5%. And we want to be targeting as close as possible or under our expected move to the downside, just adds more probabilities in our favor. And now lastly, we want to take profit at 90% of the contract value. The beautiful thing about this strategy, guys, is that it's so easy and so hands-off to run. Really only requires about 15, 20, maybe even 30 minutes if you're not too familiar of your time on a Monday and Tuesday morning. And then once you have your plays, guys, you just let them ride until Friday at the close. You just let the options time decay do the work for you and make those contracts worthless for you. So we want to be setting that take profit in the event you're not at your computer Wednesday, Thursday, Friday. At least your contracts are taking profit automatically. The last thing that you want is on Wednesday, let's say you're not watching, your contract ends up 90% worthless. And instead of taking profit, maybe you just don't see it. And then Friday when you check, maybe it's now come lower and lower and lower and the options contract has regained value, right? And you may be at risk of either being assigned or giving up a portion of the profits that you could have had. So that's why we set these automatic take profits. Just makes our life a lot easier. So with all that being said, guys, let's jump into last week's 5 plays. And in terms of last week, guys, well, unfortunately, not many of them hit. That's just because in the early part of the week, we always look for drops early on in the week to be able to write for Friday, right? So we really want to be writing on Monday and Tuesdays. And unfortunately, Monday and Tuesday in this week's markets were relatively decent days. The market really only started falling off a cliff Wednesday, Thursday, Friday for most stocks. That's why it didn't really free up a lot of plays on the Monday. However, we will go through them because the theory of the plays was good. It's just we weren't able to get the prices that we wanted on a lot of them. So if you take a look at Apple here, we were looking at Apple last week. We wanted Apple about the 167.5. The expected move on Apple last week was about 169. And I was saying anything under the expected move was good. So we were looking for the 167.50s at best. However, on Monday and Tuesday this past week, guys, Apple was kind of hovering around the 172.50 mark. There just wasn't enough premium down here at the 167.50s, and they really didn't even free up after Wednesday's sell-off either. So the best we could have gotten last week on Apple was the 170 strike, which was above the expected move and a little bit close. Now, if you wanted to write these aggressively, like I did last week, I personally did go for the 170s, and I got about 88 cents for them. I was able to close them later on in the week for 90% profit, but pretty much just to say, guys, that Apple just didn't come low enough to really get the 167.5s or the 165s. Now, I always give these safer strikes on the channel because the last thing I want someone to tell me is that they were trying the strategy and they went a bit too aggressive and unfortunately it didn't work out, right? So that's why I gave the lower strikes here. I personally went a little bit more aggressive at 170 because I do not mind owning Apple shares at 170. But for all intents and purposes, if you want to stick to the strategy directly, we would have had to got under the expected move, which was the 167.5 or the 165 strike all the way down here. And unfortunately, that just never opened up. But Apple will be on our weekly watch list again this week in the event that we missed that one last week. Now, the second trade we were looking at last week was one that's been featured on the channel now for a few weeks in a row, and that's Google, just because Google's valuation at these levels is just so darn good, guys. So Google last week, we were looking roughly for the 131s, 130s, all the way down here. The expected move on Google last week was in the 132s. And as of the Friday video, right, when we filmed this on Sunday, we were expecting potentially a little bit of a dip back towards these lower levels, being able to write puts down here at the lower portion of the whole 132, 131 support level. But unfortunately, it just never opened up, guys. So once again, Monday and Tuesday, you can see Google going to the upside, and they never looked back all week. So the last thing we want to do is chase a trade to the upside by writing higher and higher strikes. We want to let the stock come to us, and Google did not do that to us last week, unfortunately. So Google will be featured in the top 5 plays this week. There was just no trade available last week, however. So the third play we were looking at was ON Semiconductors. Now this one was another one that was good in theory, but in practice, guys, the trade just never opened up for us. Take a look at Monday and Tuesday's trading. You can see that they just categorically went up, right? All the way from about 78 to 82. Last week, we were looking as low as possible, as close as possible to $72 to $70 strike. And you can see that it really only started dipping hard into this levels as of Thursday. Well, if obviously, guys, there wasn't enough premium left in the week for only one day of trading to be targeting these lower areas, right? So there's really no trade on ON Semiconductor, unfortunately. But now that it has come down closer to our expected move area, we'll be taking a closer look at this one for this week upcoming. However, last week there was just no trade. It went up early on in the week, and then by the time it did come down, there just wasn't enough trading days left in the week to write these puts down here for some juicy premium. So the fourth stock that we were looking for was SoFi stock, and SoFi stock was one that, even though it did drop for a majority of the week, it didn't just drop fast enough early on in the week. You could have maybe gotten some contracts here on the Tuesday. So in the Tuesday session, we came down to about $7.50. We were looking for the $7 strikes, guys, really down here in this beautiful area. Previous support, previous resistance, right? I love this $7 area, such a big area of congestion for the stock, and seems to be an area that the bulls really respond to every single time we dip into there. Now, that being said, guys, as you can see, we really didn't come down hard into this area until really your Wednesday and Thursday session to get close enough to write some of these puts, right? So there was a slight trade opportunity down here when the $7 puts were trading roughly for about 4 or 5 cents, but it wasn't enough, guys. I want to get as close as possible to 7, which it is at now, and try to be writing for over 10 cents. So this is one of the few plays that I'll be a bit more aggressive on, just because the stock is so cheap. They've turned around their business fantastically. They're now profitable and ever expanding their user growth. Right, so that's what we want to see in the stock. So I love this stock down in the $7 and $6.50 levels, and we'll be taking a close eye on this one this week as well as one of the bonus plays that we'll be taking a look at. But for the most part, guys, I'd be highly surprised if anyone was able to get off a decent trade, because it just didn't move fast. It didn't move down fast enough as much as we would have wanted to in the Monday or Tuesday sessions. So unfortunately, another one that we just have to sit on, put on the back burner for a future time. And the last one was Caesars Entertainment. So Caesars Entertainment, bit of the same concept, right? We were looking for a little bit of a dip. I wanted Caesars under $40. So we were looking at the 39.5 or $39 strike. And this is another one, guys, where you see this Monday and Tuesday candles. You can see we didn't really dip much below about $42, kind of hovered there. And then the market, even on Wednesday, we were only down to about $41.69. I was looking at these Monday, Tuesday, and Wednesday, and there really wasn't much premium available, guys, on the 39.50s or even the 39s. So I personally did not go with this one myself. The expected move was about 40.35. I wanted to be under that, and I couldn't find 39.5s or 39s. And then the market really fell off a cliff on Thursday, having about a 4% down day here. And then obviously, guys, you know, I can't really write on Thursday for the Friday close. There's just not enough premium, and it was a very volatile day on Thursday as well. So I just didn't take this one myself. But Caesars is really coming in to the lower end now at this point, guys, of its support range, talking about roughly 38 all the way down to roughly, $35. So this one will be on a close watch for the lower bound of this support trade. You can see it's been support a number of times in recent years, guys. They really don't want to lose this $37 level. See this $37 level right here? Very, very strong level. So if we keep dipping down on Caesars in the early part of the week, that may be one that I'll consider, but I didn't put it on this week's watch list because I do believe there are a few more thematic plays for this week in terms of tech and AI that we can be playing. So that's pretty much everything for last week's plays, guys. Now let's jump into this week's plays, and you'll see that there's a few that come back just because they continue to be at juicy areas of support. Now, take a look. Play number one is going to be Google. So by this point, you should be familiar with the ranges we're trading on Google, but if you're not, take a look here, guys. The expected move on Google for the week is 139.06. So we want to be writing as low as possible under this to generate some premium right here. As you can see, these two yellow lines, we are now back above our infamous two yellow lines, and that is the big area of previous resistance, huge area now that we're above it as current support. So what I'm expecting now that the bulls have engulfed this daily downtrend, I'm looking for them to set the higher low and potentially rise. Now, this higher low could potentially be manifested if ever we get some negative news out of the Federal Reserve on Wednesday. However, if we ever drop on Monday or Tuesday, predicting the fact that Wednesday may be a red day, I want to get as low as possible here, guys. 138, 137 if possible. Would be very happy, even if I am assigned shares of Google back then. But that's the move that I'm kind of looking out for on Google. So we want to be targeting the lower bound of this, these two yellow lines, right? 138, 137 at best. So if we take a look together here on the Google options chain here, guys, let's take a look. Is the stock currently offering premium around those levels, or do we have to wait? So if you take a look here, guys, down at about the 138 strike, 137, you can see that if we want 0.5%, guys, we want to be seeing probably about 65 to 70 cents. How am I doing that in my head, guys? Well, a quick little rule of thumb, if you want to get 0.5% to 1% in premium, just do half of the strike price in 1 cent increments. So half of 140 is 70, right? So you would need to see about 70 cents here on the bid for the 140s, which you do have. So that's just a quick rule of thumb. That's how I'm doing this in my head. You can see here, if I divide 0.49 by 138 roughly, it's not yet 0.5%. It's only about 0.35% for the week. So it's just not enough. So we would need Google to come down a little bit here from its 142 mark on Monday and Tuesday to open up those trades. As I've said, guys, as low as possible. If Google opens up for some which reason 2% to the downside tomorrow, guys, let's say we open on Monday minus 2% already, and we're already at the 138, 139 level. Well, then we want to be going as low as possible, guys. Maybe the 137s, 136s free up as low as possible while still getting 0.5%. That's the name of the game. So that's it for Google. Now we're going to be looking at Apple as well this week. So Apple continues to be in my sweet spot, guys. Previous area of all-time highs, previous area of support back in our last fall sell-off, and is currently acting as support as well. Apple is desperately trying to regain the daily uptrend by protecting these lows down here at 168.75 roughly. The lows of the week, the expected move to the downside on Apple this week is 169.22. So if we really want to be conservative traders, what we need to be doing is targeting the 167.5 strike price. Let's take a look if Apple is offering, what Apple is offering rather on the 167.5 strike price, to determine whether or not we can take this trade now or whether we have to wait for the drop. But you can see right here, guys, for Friday, the 167.5s are only offering about 46 cents. If we want to respect our rules, guys, we need to be seeing at least 85 cents on this bid. And so far, you see they only are offering that for the 170s. So what I'll be looking for in Apple on Monday or Tuesday is if we can drop into this lower 170, high 169 range, that will most likely open up this trade right here, the 167.5s. And obviously, guys, if Apple opens up minus 2% tomorrow morning for some which reason, and we already open up in the 168, close to 167s, well, then we are going to go for the 165s. As low as possible below this expected move while still getting 0.5% to 1% on this bid for the contract. Now, stock number 3 we're going to be looking at, actually, it's a pair of stocks since there's 2 of them that I like at these levels, is going to be some semiconductors. So ON Semiconductors was featured on last week's video as one of the plays. And as we were recapping, it's really coming nicely down into our zone that we're targeting. We're targeting the $70 range. It's a beautiful zone of support for this stock. You can see how much the bulls have supported this area in the past, and I'm looking for them to do the same. So we're trying to get as close as possible to $70 strike prices, guys. The expected move for the week is 71.83 to the downside. That represents downside from here of about 4%. So we need ON Semiconductor coming down a little bit lower than what it is right now. Let's take a look here, guys, at some of the options premiums to determine whether or not it is offering right now on the $70 or $71 strike. And you can see right here, well, 0.5% of this would be about 35 cents. You can see on $70, it's not quite there. We have it at 71, but we really want to go for the 70s, try to be a little bit more conservative this week. So if ON Semiconductor tomorrow opens up -1 or -2% for some which reason, $74, $73 range, at that point, guys, most likely we will be opening up the $70 strike or maybe even the 69s as low as possible while being below the expected move, while respecting our 0.5% to 1% rule. As we want to be getting the 69s would be absolutely gorgeous for this trade, guys, but I would not be opposed to be doing the $70 ones myself. Now, a second trade that we can be potentially taking in semiconductors is AMD. So AMD has come down significantly from their highs, about 16, 17% at this point, and this trade is absolutely gorgeous. We have a breakout to the upside and retest. This is just in the grand scheme of being in a beautiful weekly uptrend at this point, right? So we want to be targeting the retest zone, which is this previous big range of consolidation, as low as possible in this range as possible. The bears will be getting some heavy pushback from the bulls in terms of your higher time frames coming in and buying those dips, right? So I really want to be getting as close as possible to 170. Now, I don't have the expected move on the chart right there. I apologize. So let us do it together. So let's take a look. This is exactly how I do these things. AMD expected move 180 to the downside. So we want to be below 180. I'm targeting 170, right? So let's see if AMD offers how much rather they're offering on the $170 strike. And you can see, well, it's not here yet. Let me put all of these strikes on the page. We want to be getting as close as possible to 170, 172.50 for that pullback, because even if the Federal Reserve event may be a negative catalyst, maybe we may get some positivity from the NVIDIA event, which may just counterbalance some of that negativity, right? So you can see here, guys, if we're targeting the 170s, not enough premium here yet. What we really want to see is about 85 cents on the bid. And so far that's not being offered. It's not even being offered on the 172.50s. So if AMD pulls back tomorrow morning, guys, maybe into the mid 180 range, those strike prices, 170, 172.50, may just free up for the stock. So those are two of your semiconductor plays that I'm looking to potentially be working on this week. And now your before last play, guys, rather, is going to be Palantir. Palantir, another one of our AI thematic plays for the week. And Palantir has been coming down nicely since the top here, guys. You can see that we're down roughly 14% from our most recent highs. And the bulls are in full control here, guys. Full monthly control, still full weekly control. The area that we're going to be targeting, guys, is this green box down here. We're talking about the $21.50 to about $19 level. Huge previous support, guys, 2020 and 2021, and our previous 52-week highs that the bulls struggled to get through. This is a classic breakout of this previous zone right here. Breakout, retest it to the downside before potential future runs. That being said, the expected move to the downside on Palantir is roughly $22.24. So still significant downside, right? Expectation of about 5%. Let's just see, guys, can we get as close as possible to $21.50, $21 strikes? That is what I'm looking for on Palantir myself. So take a look at the Palantir options chain with me. And we're going to take a look. Can we get good premium at the 21.50s or 21s? Let's put all the contracts in front of us. Apologies for that. And there's still a bit of premium here on the 21.5s. So you can see here, the 21.50s here, they're trading roughly about 12 cents on the puts. So that is more than 0.5%, right? 0.5% would be roughly 11 cents. This is slightly more than that, so that's good. I would like to see this on the $21 contract, guys. I want to get as close as possible to $21 in the midpoint of this green box, pretty much. It just gives myself more of a margin of error if ever the markets really take a big hit today. That being said, I'll be looking for either the 21s or the 21.50s as low as I can get. If Palantir sells off on Monday, I'll be trying to get as low as possible, guys, as close as possible to 21 or maybe even under, right? If Palantir for some reason opens up like 3-4% to the downside tomorrow in 22 range directly, well, then that may even free up the $20 strike, right? So we're looking as close as possible to $20, right? While still respecting our 0.5%. That being said, between 20 and 21, I would not be opposed. Any which one of those three strikes is fairly good. And our last of the 5 plays, guys, is going to be Shopify. So Shopify has been on the list for a few weeks running now. Why? Because it's a perfect breakout retest trade. Take a look at this on your monthly chart, right? Beautiful new monthly uptrend. Now we're just looking to retest this big previous area of resistance, which has been acting as support now in the past. We want to be getting as close as possible to this level. Shopify really doing a great job of cost control. I love their earnings. They are now a profitable business once again. Their user growth metrics are outstanding, and the company is just overall very well positioned for 2024 to recapture some of its former glory back in the growth days a few years ago. They're really getting back to that model specifically, guys. Great cost cutting by the company so far in the last 6 months. So I will be giving this company a heavy look here, guys, at the $71 strike, even as low as $70. Now, the expected move on Shopify right now is about $73.94. Let's call it about $74. So that's about, 3-4% to the downside, let's call it. We're going to be looking to get as low as possible here, guys, to about 71 as we can. So let's take a look at some of our options premium here on Shopify for the week. See if we can get some premium in the $70 to $71 range. So you see here, guys, 70, 71's not paying too much, right? You would need to see about 35 cents on the bid here. And so far, those are only being offered for the 72s. So what we want to see to get the 70s or 71s is we will need to see a little bit of a dip here on Shopify Monday or Tuesday down into the $75 range. When we get in the $75 range, guys, I do think that that will open up the $71 strike for the Friday close. So that's the one that I'm going to be looking for specifically on Shopify, as close as possible to $71, $70 while still respecting our 0.5% rule on the premium. So those are all 5 of the plays, guys, that I'll be looking out for this week. A few notable considerations that I am looking out for, going to cover these very quickly. One of them is Intel. Intel is quickly approaching another breakout retest trade, right? So monthly beautiful uptrend. We broke through this previous big area right here. It was the 39 roughly. That was huge area of resistance in the past. We're now above it and we're looking to retest this. You see it better on the monthly, right? This whole previous big area, Intel just looking to come back into it. So that's about the $38, $39 range. You can see, guys, we're right about 42 right now. So this one is on my watch list for the upcoming few days. If ever it has a tremendous sell-off this week, I may be able to target the 39s, $40 myself, right? But we're looking for that for the future, guys, between $40 and $38 strikes for the next couple of weeks if Intel does continue its consolidation into this level. Juicy trade, in my opinion. Now, the other one we're going to be looking out for is SoFi this week. If SoFi continues its plunge down below $7, I'm going to be looking for the $6.50, maybe for 1 week or 2. So SoFi, we really want to get as much premium as possible because the stock is so cheap, right? And because I'm expecting a significant rebound. So I may be tempted to, if we get a dip here on SoFi down into the 680, 670, I may be looking for the 650s for this week, or maybe even I'll go 2 weeks out and try to farm as much premium as possible down here in the $6.50 strike. I think it's a tremendous play, even if assigned, guys. Should get a heck of a bounce when it does happen, be able to generate some juicy premium on the buy-in. And then when we write the covered calls, if we're assigned, guys, I do believe that it's going to print us some decent money. And the last one for consideration for the week, guys, is I'm looking out for Starbucks. Starbucks, I have this one on the watch list. Starbucks really starting to break down here, guys, into this support zone right here. You can see we're trying to break our last area of support from last October. If we, for some reason, break and flush and end up $87, $86 over the course of the early part of the week, I may be looking for the 85s, guys, as low as possible as we can get for Starbucks. Starbucks, kind of being unfairly sold down, in my opinion, because of its exposure to China. That being said, at $85, it represents a heck of a buying opportunity. So that's just the one that I'm looking for some trades down there in the lower 85s. And then you guys know there's always a few that I constantly keep on my watch list. We'll run through these extremely quickly. Don't want to spend too much time on these, but OXY, these are just something to put on your watch list, right? OXY, $56, $55. Chart speaks for itself. Huge area of support, right? MRO, same reason. Down here, $22. Always on my watch list. A company like GDXJ, the gold miners, right? Between $33, $31, always on my watch list as well. A company like Philip Morris down $89, $90 range, extremely juicy in my opinion. Company like Johnson & Johnson, always on my watch list, 157 down to about 151. Huge area of resistance, huge area of support. We're kind of in here. So I've been looking for Johnson & Johnson the past couple of weeks, 155 or better. Super nice play there as well. And another one of the last ones here, guys, Expedia. I love Expedia stock at these levels. If we can get down to 125, look at this perfect breakout retest, right? Big range, monthly breakout, monthly uptrend, right? Retest of this range, looking to run outstanding fundamentals. I love their earnings that we covered on the channel. Company is extremely well positioned for the next 6 to 12 months. 125 would be very tempting for this company. So that's another one that's just on my short-term watch list, right? And the last one pretty much that's always on my weekly watch list is Pepsi for a significant drop. Pepsi, every time we get close, 162, 160, guys, bit of a no-brainer for Pepsi. Look at all this juicy support, guys, 162, 160 level. The bulls always seem to reject from there. So it's always on my watch list. If we can get a nice drop and I can get some juicy premium, guys, 162, 160, I'll always be evaluating that play as well. So hopefully all this was helpful for you guys in terms terms of how I choose my plays, the criteria and stuff like that. If it was, consider dropping a like on the video. Would really appreciate it for the algorithm. And also consider subscribing to the channel if you're new, guys. We do these videos every single Sunday night, the top 5 options plays of the week. And we also, Monday through Friday, do our daily market recap. So stay tuned to watch those as well on the channel. And as usual, guys, if you have any questions whatsoever, always feel free to reach out to me down below in the comments. If you have questions on the strategy, a specific options play you want me to review, anything you want, leave it down below in the comments and I'll be happy to help you. So take care, guys. Have a beautiful week of trading. Just be very careful of our main 2 events. One highly negative event on Wednesday from Jerome Powell. I give you the expectations. And this one, the positive catalyst that could really help our thematic plays of semiconductors and AI plays such as Palantir over the course of the week. So hopefully that was insightful. I love you guys. Take care. Happy trading. Peace.